what's harvest look like out in your area? Are we about to close things down? Give us shoot in the chat if you get a chance. Chat in there about where you're at in your area on harvest. I think we're down to the crumbs here in southern Illinois. Little bit of big corn left, very little corn, and really just a few beans as well. Mike, you seeing the same thing up your way?
Same thing, exactly right.
Yep. Jeff, I didn't ask you, where's home for you?
Yeah, outside Philadelphia. So.
Well, I see your harvest is complete then.
Never started.
Yeah, we're good. You know, the huge growing area in eastern Pennsylvania here, right? So.
Are you near York? Lancaster, York area? Is that where you're from?
More closer to Philadelphia. So. King of Prussia, Valley Forge area. So we're really just about 30 miles west. I mean, Lancaster is probably another 40 miles west of us.
Look like Sam, Central Indiana. It sounds like you guys just finished up there. I did see pictures of that on Facebook, so I knew that you did. Looks like you guys celebrated in the tractor. So, Jeff, you're not a Phillies fan, right?
I'm not a huge baseball guy. I mean, I'm more football and hockey, but yeah, I'm actually a Green Bay Packer fan, so go figure.
All right. I bet you there's a few Green Bay Packer fans listening. I found out the hard way. You've got to be careful when you get into that Kansas, South Dakota, North Dakota, Minnesota, because there's a lot of Chiefs fans, but you still get a mix of Green Bay and Vikings fans up there. It's pretty serious business in North Dakota.
Oh, yeah. No doubt.
Yeah. We just had two people from North Dakota hang out now that you said that you're a Green Bay fan. No, I'm just
Not off to a great start here, are we? Oh, well.
There we go.
We are, there's a flurry of marketing activity over the last 24 hours in our area, and I know I've got some folks from Minnesota and North Dakota on here, so don't shoot me for saying it, but our basis levels are really, really strong here on the Ohio River with ethanol, and so $13 and, actually $6.10, $6.15 have been in play the last few days for some deferred flat price averages. So it is, I think a lot of farmers are locking in some prices for months-old bushels in the bin. Sure looks like a pretty good idea. A lot of folks down here like to have bins cleaned out. We have a crazy thing here where our roads get posted. So if your bin's set on the country road, January 15th through April 15th, you kind of have to have permission to haul. And so a lot of folks like to haul in December, those first 2 weeks of January, and this has been a pretty good opportunity. A little bit of interest in new crop. I've had my phones pretty much rang off the hook yesterday on different marketing strategies for new crop. A few of them out there that Sterling and I have talked about in the past. There doesn't seem to be anything wrong with the good old-fashioned futures only or hedge to arrive, but Sterling, we mentioned some three-way options strategies probably a year ago on here, and some folks remembered those. So we cooked up some three-way strategies yesterday for November 2022 soybeans, and I think some folks are starting to dip their toe in the water as to soybeans.
That's probably a pretty good idea. We're kind of in a happy time right now, where normally when you look at a commodity market, say crude oil or soybeans, the base item being crude or soybeans drives the components. And right now, the soybean meal and the soybean oil are driving the bus for the soybean market. Those are a derivative market, and those can change. By derivative meaning, if they cave in, the soybeans are going to cave in a lot harder. So what we're seeing with the strength in the meal, the strength in crush margins, and what we're seeing, particularly with strength of soybean oil, that is, I hate to use the word transitory because everything is transitory over a long enough timeline. This is something that can prove to be pretty transitory over a much shorter time horizon. And if we lose that support, particularly from the soybean oil, which that can get very slippery in a hurry, we could find ourselves with the soybeans right back sagging where they were.
Yeah, I think you bring up a good point. Fundamentally, there hasn't been a big change overall to our supply and demand situation. Not far enough down the road, maybe in Brazil, to get a good idea of above average, below average, that type of thing. Going to be a while there. Our numbers in the U.S. look like they are pretty solid. We talked about this last month, how probably won't see a lot of changes to these yields. It seemed like they were, I wouldn't say etched in stone, but probably less likely to change than what we saw last year, especially any surprise cuts. If anything, I think we were kind of leaning on the side of corn, maybe even ticking up a little bit. Soybeans maybe in question. So, yeah, fundamentally, not a lot of change in this thing.
Yeah, we're still sitting, in a big U.S. carryout for soybeans. Seeing corn yields getting cut in January, I think might be a bit of a stretch. I certainly wouldn't count on it. I think this January report, which is going to be the next really big WASDE report, may have a few fewer surprises for the domestic crop than what we've seen in previous times, particularly for soybeans. Because again, going back, if you think about soybeans, they went in early, they came out very quickly, very easily. So those ideas about yield numbers, well, those have become pretty transparent pretty quickly. And that is...
It appears that we have got a pretty solid listening group without a lot of people ticking in here. Would you like to officially kick us off? Sometimes we talk through this, and Christy always gets on to us, Jeff, and she goes, "You didn't give me a chance to officially kick off the show." So, Christy, here's your chance, right?
Well, actually, I just love it when you guys just start going. We have so much information today. I really don't want to take a whole lot of time. Do want to welcome everyone to today's ASNA Edge November marketing meeting. We are so excited to have you all here today. And as you notice, and you will see a lot of things here, especially in the presentation, we are now ASNA Edge. So that is Agrisampo North America Edge. And we do believe that we are providing for you that edge that you need to provide to your customers and for your operation, that extra bit that you need to succeed. So please make sure that you reach out to your agent if you're a producer, and if you're an agent, reach out to us so that we can help you, get the information you need so you have the best risk management plan that you need. Our team does just do that, provide you with critical information that you need to complement that traditional insurance plan so that you can use private products along with these marketing plans, and we can use that marketing analysis to help you put that best risk management plan in place. So get with us, get involved with all of our publications. We have a podcast, we have our daily calls that are becoming podcasts. It's really cool. You'll love being a part of all of this. We have Sterling Smith, we have Brooks York, we have Mike Toohill, and today we have special guest Jeffrey Doran, who is with Planalytics, and I really don't want to take any more time, so I'm just going to pass the ball right to Jeffrey. Jeffrey, please just share your screen. You should have all of the, you should have the ball in your court. Please tell us all the great things that you have for us today.
Well, thank you, Christy, and thanks to all of you for the invitation today. Very excited to be talking to you. Hopefully you can see the slides, maybe just Sterling, if you can confirm that you're seeing my slide at this point.
We're seeing you.
Okay, let me, okay, I'm going to, Now
There
share
you
my
go.
screen.
There you go.
All right.
Good to go.
Get these technical difficulties out of the way here. Bring this up to presentation mode.
There
Okay.
you go.
Let me start over. Hello, everybody. I'm Jeff Doran. I'm the Director of our Specialized Support and Services Group at Planalytics. I'm really pleased to be part of your meeting today. Just a little bit of background. Sterling Smith and I have a long history together from his days at Bloomberg, and he's continued to be part of our regular meetings going forward. So when we found out in talking to Sterling that you had this regular meeting, he thought it would be a good idea to introduce ourselves and to talk a little about who we are and some areas around the globe that it might be good for us to focus on. So again, thank you very much. So the agenda, I'd like to take maybe about 20 minutes. I really don't want to go much longer than that. I know you have a lot going on. Just a little bit about our company, Planalytics. We've been in existence since 1996. We are the leader in demand analytics. So we'll talk about that in just a bit. And then really focus on our agribusiness support. We service a lot of different industries, but certainly we do a lot in the agribusiness world. So I really want to focus on what we're doing with clients, some of the reports, the insights and analytics that we provide. And then again, Sterling asked me to look at these three areas of the globe specifically in terms of what do we think the upcoming winter portends, and I guess in South America would be the summer. So so we'll take you through all of that, and certainly there'll be some opportunities to ask some questions. So who we are the global leader in predictive demand analytics, and it's all about enabling consumer companies to really understand how their businesses are impacted by the weather. We're not just providing weather, we're providing weather analytics. We do demand modeling for various categories in the retail space. Again, our main value proposition is to significantly reduce weather volatility, improve forecast accuracy. You can see all of the various industries that we support. I will tell you that about 80% of our business supports the retail and manufacturing space. So retailers like Lowe's and Home Depot, the Gap. I mean, think of all the types of retailers and the weather's impact on them, and certainly a lot of suppliers as well. The MTDs of the world, the ITWs of the world. But again, we support the energy space. We support the insurance space, and also the agriculture space, of course. So taking a deeper dive into our agribusiness clients, this gives you kind of an idea of the types of companies that we work with. So again, financial services is a large segment of our business. Certainly seed and crop protection companies. We provide some unique insights around how they can be planning their upcoming season. We work with a lot of crop insurance companies too, and you'll see why in some of the offerings that we provide, and certainly in the agronomic services. This is just a listing of a small sampling of clients that we support that will allow us to use their names. And again, certainly Bloomberg is in there. I mentioned our prior relationship with Sterling Smith. So, in terms of the kinds of information we provide, it's really, across the entire timeline, right? We provide reporting in terms of explaining weather's impact. So again, we're looking at historical weather reporting. We have a platform called Crop Planner that actually provides global growing degree day information for 25 different crops around the world. So again, this platform will allow anybody to understand kind of the stage of the crop at any time. And we have a lot of reporting in terms of the present, so really focusing on the next 2 weeks. Again, weather, but I'll talk a little bit about what we do in terms of greenness and NDVI. So a lot of 2-week reporting, and then going forward, it's really around our seasonal outlooks. We have a lot of meteorological knowledge. I am a meteorologist myself, and we've been looking at we're very aware of the trends that drive weather patterns. And so I'm actually going to later in the briefing provide a little bit more insight into that. So this is just a very broad smattering of the reporting that we provide across our agribusiness segments. And I don't want to necessarily go through, I'll just highlight a couple of these. Our green report is a weekly report we put out in season. We partner with a company called Parametrics Agriculture out of University of Kansas, who actually provides satellite-based NDVI data. And we actually transform that data based on 30 years worth of that history into providing weather insights versus last week, versus last year, versus normal. We provide monthly reporting, really highlighted by our seasonal outlook, which I'm going to spend a good deal of time here later in the briefing. I mentioned before our Growing Degree Day platform. It's called Crop Planner. Again, it's a global platform and allows you to, again, understand not only where we are in the crop cycle, but where we expect to be as we go forward for all these various crops around the world. We do our own crop yield forecasting. Again, with working through Parametrics Agriculture and this greenness data, we've been doing crop yield forecasting since 2003. And you can see all of the various crops that we support here. And again, we have plenty of clients that are actually taking advantage of our crop yield forecast. These are come out every 2 weeks during these periods of time. Some ad hoc reporting, again, in advance of the planting season. We will do a corn and soybean planting outlook. So that's, again, giving clients an understanding of what are the typical planting dates based on history. But then more importantly, as we come into the season, how does weather potentially impact those timelines? And what will be the impacts of those? And then we're always looking at things like severe weather, tornadoes, hail, high winds, and certainly snow and ice, and all those other various weather scenarios. So agribusiness weather brief. So I just want to focus on a couple of these. Agribusiness weather brief is our Monday morning report, and it's kind of a last week, this week, next week report. It's really focused on temperature and precipitation trends over that period. But again, we're saying what based on what's occurred, what are the impacts to all things agribusiness? Right? We talk about things like drought. We talk about things like freeze and the potential impacts. We track crop progress through the USDA crop progress bulletin, and then every week we actually insert our greenness maps, and again providing the various insights there. And then our seasonal outlook I mentioned before. This is basically taking all of the weather trends globally that we know can impact the trends, and we're looking out over the next 90 days. So basically, we're building a story, if you will, around what are the weather patterns that we're looking at that are going to shape the upcoming season, and then we're able to build the story around that, and then provide a 3-month outlook. And so I'm going to be taking you through. Basically, I'm going to take you through kind of a shortened version of that process that we go through, and provide you these various outlooks. So when I talked to Sterling, these are the 3 areas that he thought would be good for me to focus on in terms of where we think the weather is going to be as we head further into the winter season. So this is probably a slide that many of you have not seen, but for us, this is where it all starts. This is actually a depiction, it's an animated depiction of the sea surface temperature anomalies or change from normal. So this is looking globally, and where you see the shadings of blue represent colder than normal, shadings of red and orange represent warmer than normal. We superimpose the atmospheric pressure systems, because what we know is there's a very strong linkage between what happens in the oceans and what happens in the atmosphere. So from these pressure patterns, we can diagnose some of these particular trends. So I just want to highlight a couple of areas here. Certainly the thing that jumps out at you, should jump out at you, is in the box there in the equatorial Pacific. That cool water represents what has been a growing La Nina trend over the last several months. And frankly, this is going to be the most predominant feature from a weather perspective that's going to drive global patterns. So if we look at kind of the 3 areas of note that I mentioned before, if we look at North America, the U.S., right now we're in a pattern that's been promoting a lot of storminess across the Northwest. You can see that black L represented, that's upper air low pressure. You can see that cold water associated with that. That's been driving a lot of storms up over that high pressure to the southwest. So again, it's really been responsible for continued wet weather across the Pacific Northwest, the northern tier, and then down into the Corn Belt area. So that's going to be the predominant feature as we head through the next several weeks and months. It's going to be fairly wet across the northern areas, while a lot of the south looks to be drier. If we go across the ocean and look at Europe, we now have a situation where we have a lot of fast-moving storms across the continent right now, as indicated by that low pressure. We have strong high pressure in the North Atlantic, so again, kind of diverting storms up and over that atmospheric ridge, and really dropping in what looks to be some pretty cold air over the next several weeks into much of the continent, and that will certainly come with the heightened potential of snow, and that would certainly include some of those wheat areas of Eastern Europe as well. So we'll continue to watch that. We'll take a deeper dive there. And then finally, I want to look very quickly at South America. It has been a very interesting start to the planting season down there, and it's really driven by that low pressure that you see directly over Brazil. That has really contributed to, after a dry and warm start several weeks ago, it's become very cool, very wet. And as long as that low pressure sits there, we're going to continue to see those trends in place. So I'll talk about that a little bit more when we get to it. So really just kind of rounding out the idea of the things that we're looking at. I mean, really for us is all about the La Nina and all of the associated downstream influences that we see from La Nina. This is looking at a depiction of the sea surface temperature models that the IRI CPC actually run. And so there's a lot of information here, but suffice it to say that the consensus forecast is that we're going to remain in La Nina pretty much through the entire winter. And we'll start to transition out of that as we head towards spring, but this should be a classic La Nina type of winter ahead. So when we look at the major weather factors, and we talked about La Nina, that's really going to drive things. I mean, a typical La Nina is going to favor this idea of a colder north, warmer south. I think the concern is going to be, particularly if we're looking at kind of the wheat areas, we've been running some deficits in terms of precipitation of late. And so folks we work with down in that area are going to be fairly concerned. And I think there is concern as we head through the winter in those particular areas. But again, looks like the potential for good precipitation through the winter time across much of the north, to include the Dakotas, the Western Corn Belt. That all looks pretty good. We talk about something called the Madden Julian Oscillation. It's really a tropical forcing mechanism. I mean, it's more influential in the summertime when we think about tropical systems, but we still have to monitor this during the winter. We watch this trend actually cross the Pacific at various times and has downstream influences. What we're saying here is it tends to have an influence in a La Nina season, but right now it looks fairly weak. I think the other big thing that we're going to have to watch as we head through the winter is this idea of the polar vortex. You've probably heard the terminology, but kind of the way it works is that if the polar vortex weakens, that tends to let loose the cold air. We saw that last February when we had that record cold blast. In a season like we're having here, and the stratospheric parameters kind of point to the potential for a weaker polar vortex, which would lead to colder outbreaks. But for right now, it seems to be holding fairly strong. So right now, it's a pattern that's going to support a lot of what we're seeing right now. Storms moving very quickly across the country. We'll see a pretty good warm up ahead, and then pretty sharp cold pushes behind. As we start to head toward January and February, our chances are going to increase for more extended polar outbreaks, but for right now, not so much. And then we've been watching, again, a very stormy pattern, a lot of very fast-moving systems. We talk about an extending, retracting Pacific jet stream. When it extends, we bring a lot of that wet weather, we bring warmth, which we saw a lot over October. When we have a retracting jet stream, that's when we start to bring in the potential for some cold air to slip in behind some of these systems. So again, very transitional, and that's kind of how we're looking at it there. So as we first of all, just looking back, it was a very warm fall, right? For most of the country. You can see that here. The shadings of red represent warmer than typical conditions going all the way back to September. And it really led to a lot of late season maturity into particularly across the Dakotas. I mean, we were seeing greenness well into positive greenness well into late October. So again, this stretch of very warm weather, the fact that we did not have a significant freeze until much later than typical, in some cases up to 4 weeks later than typical, given these warmer temperatures. But what we also saw was a very active Pacific jet stream. So you can see on the right, all of the wet weather is indicated by the green shadings from the Pacific Northwest all the way through the Dakotas, Western Corn Belt, and then certainly across much of the rest of the Corn Belt saw some issues with harvest. Now, as we look forward for the U.S., looking at the next 14 days, I mentioned before, high pressure in the Southwest has kind of led to storms coming up and over that high pressure, and it's going to be allowing for some warmer temperatures in the West, but we'll see some pretty good cool shots over the next couple of weeks. I think it was mentioned earlier here that, really sharp cool down here that's happened over the last couple of days. Really expect to see that here in the short term. Get a brief warm up and then a pretty sharp cool down here. So, I think this pattern would certainly support the potential for kind of, wheat going into dormancy at a fairly normal rate, but a little bit drier over the next couple of weeks. It's going to be a bit of a concern if this continues over the wheat areas. But again, more moisture across the east and the Pacific Northwest as well, which has seen exceptional drought relief over the last couple of months. And now we're in the period we're looking at snow. We really haven't had a lot of snowfall compared to normal at this point. But you can see that with that active jet stream, the fact that we're going to be pushing in these cold pulses, we're actually looking for the potential for some snow across parts of the eastern Corn Belt here. That would be more into next week. But again, tis the season, I guess I should say. So just to wrap up the U.S. very quickly, this is kind of a generic view of what we would typically provide clients in this seasonal outlook. This is really looking at the average over the next 3 months. And look, it's an average over 3 months, right? But I think we're pretty comfortable with the idea this is a classic La Nina type of winter. These are the trends we typically see, is that we have the colder and wetter conditions across the north. We have the chance to build some really good snowpack across the northern tier, Dakotas, Minnesota, Western Corn Belt. I mean, certainly it could extend into other areas of the Corn Belt as we head through the winter, but warmer and drier across the plains in the south, which is, again, fairly typical. So that's kind of how it looks in the U.S. Again, we update these briefings for clients every month. And so there's always some different things to look at, but right now, that's kind of what we're thinking. So I want to move very quickly into Europe. Looking at season to date here, it's actually trended cooler than typical over this very broad stretch for most of the continent, particularly there in Eastern Europe. I mean, there have been some occasional warm-ups, but it's generally been cooler and drier for most areas as well. But I'll tell you, across the south, so from Spain across the Mediterranean into Italy and parts of the southern Balkans, we've had several systems that have produced excessive rain and flooding in those areas. And I know that, I'd seen earlier that there were some real issues with cotton in parts of Greece and again, the southern Balkan areas. And but overall, it's been a fairly dry fall for a lot of areas. Now, if you look further to the east there in kind of the primary wheat area there in the Ukraine, it's actually been pretty wet. And I've been reading that there's been some pretty considerable harvest delays, summer crop harvest delays, given how wet it's been. So I guess they can certainly use the moisture, but again, that's been the general trend there. In terms of the next 2 weeks, we're looking at a pretty good cold push here. This is looking at mean temperatures, but the maximum temperatures are really going to struggle to get out of the 30s and the 40s for a lot of continental Europe here in the next couple of weeks or so. So with that high pressure sitting over the North Atlantic, that's going to really allow for these pulses of cold air to be moving across the continent. So, and that should extend into parts of Eastern Europe as well. In terms of precipitation, again, low pressure has been pretty predominant over the Mediterranean. It looks like another very wet period across parts of the south there. So, moisture reserves are certainly going to be good, but it has come with some issues with late season summer harvest as well. And then snowfall, certainly with that colder air, looking at a push of good snow. So get a swath of snow certainly on the developing wheat will be very beneficial. And then in terms of the winter this year, again, this is a very broad period of time, generally normal to below normal across Western Europe with above normal temperatures further to the east. It's going to be a winter of fairly normal moisture, but again, you can see that area of enhanced green across the south. It indicates that we're still going to support a lot of potential storms there in Europe. Okay, and then finally, I want to move to South America. Certainly, this is an area that we focus on pretty significantly at this time of the year. So again, going through the exercise, looking at the last 3 months or so, looks generally warmer over much of Brazil and Argentina. But I have to tell you, a lot of that was front-loaded into September and through, let's say, the first 3 weeks of October. But really, since the last 10 days of October through current, it is really turned. It's turned a lot cooler. And take a look at the precipitation as well. I mean, the season started dry, but as we continued through October and into November here, it's become considerably wetter. And certainly that's boosted moisture reserves. It has interrupted planting progress for some, but frankly, planting, given the very good moisture reserves, has been ahead of both normal and last year. So I mentioned before that we provide this greenness information. We provide it for historically we provided for North America, but in the last 3 years, we've now actually made this available for both Brazil and Argentina. So now what you're looking at is the latest greenness imagery. On the left is the difference from the last period, difference from last year in the middle, and difference from average on the right. And there's a lot of green on this map. And we're really off to a very good start in terms of moisture, and things are progressing along very nicely in most areas. The exception is really across parts of the south. They're in Santa Catarina, Rio Grande do Sul. Southernmost Brazil has been getting missed from these very beneficial rains that have occurred of late. So certainly Sterling knows we've had these regular discussions here. It's something that we're going to have to continue to watch very closely. And by the way, we actually do soybean yield forecasting in Brazil, which actually will be starting next month. So it's really important for us to continue to track the conditions here. I mentioned before, we also provide this information for Argentina as well. Argentina has not been as not benefited as much. They've been missing precipitation, particularly for central and western areas. I mean, they started the season okay, but things have turned considerably drier. I mean, fortunately, the temperatures have not been fairly high, so there's no significant stress for any kind of early emerging crop. But yeah, they really need more moisture in this area, particularly compared to normal. You can see just how much greenness decreases we're seeing versus what we should be seeing. So this is something we'll have to watch pretty closely. And then looking at the next 2 weeks, I think more of the same. So again, for most of these key growing areas, we're focusing on the soybeans, cool and very wet weather. I mentioned before that low pressure system. When we look at the sea surface temperature slide, that's going to continue to funnel in storm after storm. I mean, each week we're seeing 2 to 4 inches of rain across a lot of these key central and northeastern growing areas of Brazil. And right now, the suggestion is we're going to see more of the same. So it's great to have these moisture reserves in place, but certainly with a cooler weather, the pace of the pace of early crop development might be interrupted a little bit, or at least mitigated. But it's always good to have moisture in this area. But look, Argentina looks drier, and so that is going to be more of a concern as we look at Argentina and kind of where they are now. And certainly, this comes to fruition. We're going to see increasing issues as we get further into the planting season. And then finally, just looking at what for them would be the summer outlook over the next 3 months. And again, more of the same, excessive precipitation. We don't see a lot of change here. The southernmost areas of Brazil look to trend drier along with Argentina. I mean, certainly they will get some moisture, but compared to typical, it's going to be a bit more of a challenge. So there's kind of mixed messaging here. I think Brazil is looking really good from a weather perspective. Argentina is as a problem area potentially we're going to have to watch as we head through the season. So I know I've gone a little bit over what I should have, but a lot of information to share. And I would just kind of throw it back to see if there are any questions or kind of where we want to go here.
One question that I have, looking at the temperatures moving across Europe, we know that the European weather situation is driving the natural gas market, and that is in turn creating derivative problems for producers here in the U.S. because it's driving up fertilizer prices, it's pushing natural gas higher. Do you expect to see, or do you have any work on how we see things really moving January through March in Europe? Are we going to see this continued cold trend, or is the winter going to ease up on them a little bit?
Well, yeah, I mean, that's a great question, Sterling. Really hard to say this far out, but right now, if these patterns hold that are in place right now, as we head through the wintertime, we've got a cold winter for Europe on tap. We're really just starting to see the first vestiges of that pattern. And so I know I showed the long-term outlook that showed some warmth over Europe, but for kind of the western half of Europe, I really think we have the chance to have a pretty cold winter. So yeah, I think it could become more of an issue as we head into midwinter.
Yes, I've got a question, kind of related. It's weather related as well. I'm going to switch continents, though, and I'm going to go to China. We talked about China's production of fertilizer possibly being hindered by coal issues over there, as far as a shortage of coal. In one of our previous Third Thursday marketing meetings, we had some fertilizer folks on. They talked about how temperatures in China over December and January could actually have an impact on farmer fertilizer come the spring. Any indications of what that weather pattern might look like in China?
Yeah, I'd have to. I mean, I didn't take a look at that, Brooks, but maybe let me go back if I can, if I may. Let me just go back to the sea surface temperature slide, because just kind of looking at this might help us diagnose a little bit of what we're looking at. We are seeing some early cold, as we would expect across Siberia. This high pressure, this is that Siberian high that tends to amplify during the winter season. So we're already seeing some pretty good vestiges of cold. We've already seen some cold outbreaks over Mongolia. Again, depending on where the Siberian high goes, I mean, typically it will pulse further and further south. So, everything looks pretty normal in terms of how we're moving into winter here. So I don't see anything unusual. I think there's certainly a chance we could see some periods of some pretty cold temperatures over the Eastern Asia here. It's certainly something that through Sterling I can take a closer look at and get some more information and certainly pass it off to you. But just diagnosing the high level pattern here, that's kind of how I would see it at this point. But certainly I can follow up with some additional detailed information.
Folks, you've got him here right now. Don't be bashful. Use that chat button if you've got some questions out there. Jeff, how worried, I shouldn't say worried, how concerned are we at this point in the game with the situation in Argentina? Looks like Brazil, you painted a pretty good picture.
Yeah.
What really, if you kind of had to really analyze that risk to the Argentine bean crop, how would you categorize that right now?
I would say moderate to marginally elevated at this point. I mean, look, we're still very early in the season, but the trend is not our friend here, Brooks, because we got a pretty decent start. But now kind of the orientation of these pressure patterns, as long as they hold, which I would expect they would do, Argentina is going to generally get missed. And so if I'm part of your marketing meeting next month for whatever reason, and we really haven't had much relief, my concern is going to grow greatly, because once you start setting up these very dry soils and drought, once we get into the heart of summer and the heat starts to kick in, heat begets drought, drought begets heat, and it's a vicious cycle. So I'd say right now, again, slightly elevated, but I am concerned with the trend.
Sterling, I kind of throw that back at you as kind of a secondary question. Is the market doesn't seem to be concentrating on any kind of Argentine issue right now. How much is that playing into this little rally that we've seen, if at all? I guess my opinion would be very little at this point in time. Do you have a different perspective?
Well, the thing we need to remember about Argentina is not just a major soybean producer, they're a major soybean meal exporter.
Right.
And as I'm going to talk about here a little bit, we're going to talk about crush margins and things. If we begin to see problems develop in Argentina, that typically is very beneficial to a soybean meal market where we've had, considerable tightness in the protein side of the field of the feeding rations. And if we do see, a difficulty there, that will again work to tighten the entire situation, work to drive meal prices higher. And if we drive meal prices higher, we can drag or at least support soybean prices along with that. That is where I would be my biggest concern, particularly they're very big exporters of soybean meal into Europe. And we have seen, and I've noticed, much better soybean purchases coming out, particularly out of the Netherlands and Germany. And I'm beginning to see better and increased soy meal exports going into Europe coming out of the United States.
If you're listening out there, there's a lot. If you're an agent, if you're a farmer and you're on the call, how long can this thing last in soybeans? Sterling and Jeff and myself, we would love to tell you that we had the answers, but I think we all agree that we're in a risk period right here, and this risk period is going to be the highest over the next 60 to 70 days. When there's risk, when there's unknowns, we've got volatility. Sterling made mention whenever I talked about that three-way strategy for new crop, unsold bushels in the bin. When we got risk, when we've got volatility, Sterling, a lot of times we've got opportunity. I think it's really, really important that with the gradual change of the balance sheet, we're pretty active over these next 60 days based on what you heard Jeff say, based on what we know historically. Sterling, follow up on that.
Well, your particular risk here, and there is some good risk and there is some bad risk, and again, it's going to come down to a certain degree to South American performance. One thing I'd like to note, last week we saw the busiest week, or week before last, the busiest week ever for soybean exports coming out of the United States. We moved more beans than we ever have. Right now, we're running a little bit to our about average, but we had been running a little bit behind and we've caught back up. If we see particularly this Argentinian situation develop, having some beans in the bin could prove to be fairly beneficial. They may not be going into the export corridor, but they may end up getting crushed here in the U.S., and that can certainly be something where having some beans on hand could be beneficial, especially when we get out, we start getting into that January period where the risk is probably going to be working to get itself most well defined.
So some good opportunities here. I don't think we can be asleep at the wheel. Even with the inputs that we talked about last month being, incredibly higher than they were a year ago, the math still works on some of these new crop numbers out here when we look at APH. When you put the guarantees out there with crop insurance, it may not get us quite up to that break-even level like it did, earlier this year, but it's still a fairly sound footing as far as risk management goes. So definitely something we want to take a look at. And that's one of the holes in crop insurance is that we are prepaying so much right now on the farm for expenses. We're putting fertilizer on the fields. We're making seed decisions. In a lot of cases, throwing that money in or locking in those prices. Our insurance mechanism does not step in until February. So there's still nothing wrong with some forward contracting this early. I think historically it's been looked at as too early. I think the game changes when we've got a higher percentage of our inputs that we're throwing into the previous fiscal year.
Yeah, I would definitely agree, Brooks. Did we want to move on, start looking at the markets, or what do we want to do?
So, give us some good news.
All right. Well, let's go ahead. If Christy, if you'll throw me the ball here, and we'll talk about the good, the potentially good, the bad, and the ugly. So.
Good to be with you, Sterling.
All right. And if everyone's seeing my chart, what this is a chart of soybean crush margins. So when those beans end up getting processed, this is how much the processors are making. To be profitable, typically we like to see this around the 75 area or so. And as you can see, they've been very elevated. In fact, if we go back, we'll push this chart back a little bit further into history here. We can see that the best level we ever had going back to 2013 happened about a week ago. And these crush margins stay elevated, and these are board crushes, so it's a pretty good proxy for what's actually going on. This gives a lot of incentive right now for processors to crush soybeans. They are going to be going at it as fast as they can. They have a good open slot in the export corridor to move these. So this is the thing that's been working to support the soybeans. If we take a look at soybean meal prices, and I'm going to punch those up here real quick. We look at meal prices. As you can see, we've come out. We really weren't doing very well. In fact, our meal had gotten nice and cheap. And again, when you see cheap prices like this, that opens the door to exports. And as you can see, we are moving along quite nicely. And I monitor these prices in Rotterdam and other places, and they have done very well also. Now, we take a look at the soybean oil. Go right here and bring this up. Soybean oil, which is sometimes kind of forgotten about, as you can see, soybean oil prices have been on a mad tear. A couple of things. There's ideas that we're going to see changes in the RFS. We're going to see legislation promoting biofuels. That has brought in a lot of speculative demand, and that has worked to lift prices. The other thing that has worked to really help out prices here is, I'm going to switch over here to crude oil real quick, is, as we all painfully know, crude oil prices have been moving up very, very steadily, and we're seeing some very, very high prices here, and that is pushing gasoline prices up. This is also a beneficiary to ethanol production, corn prices, and soybean oil prices. So right now, we have these elevated prices, and that's working to keep the soybeans from having a bigger problem than what they would have had otherwise. Now, when we get in here and we start looking closely, we can see here that crude oil has had a little bit of a problem. We're down about 9% from the highs that we put in just 8 days ago. Is this the end of the crude oil market? Well, that is probably the biggest single debate going on in the markets right now. I'm of the opinion we have typical seasonal lows that come in November through December. And prices typically go down, and we're seeing a little bit of that, and we had a stop in the rally. My concern is February happens to be the best month for energy prices in terms of them rallying. We see very sharp rises in wholesale gasoline prices and sharp rises in crude oil. So while there's plenty of oil around right now, typically we see a bump in travel around Thanksgiving and around December. How much of a bump we get this year is going to depend on the COVID situation, which is highly variable. There are a lot of problems going on in Minnesota and Michigan right now. In fact, there's talk about schools going remote and things of that sort. That could end up affecting travel, and we end up with an excess supply, and that in turn could keep prices under control a little bit. But typically the market adjusts very quickly to this, and we see production get cut off to take away those supplies. The other issue is coming from the government, and we are seeing and we're hearing some talking right now about releasing oil from the strategic reserve, maybe taking some measures against the energy companies. So far, this is just talk and things like that. A release from the strategic reserve will push prices down for a little bit, but it tends to be something that is a bit of a flash in the pan. So this is going to be one of the charts that are going to be driving this and a lot of other things that we need to be concerned about, which includes interest rates, which I'm going to take a look at here right now. If we see continued inflation numbers, and we have had very, very strong inflation numbers. If we look at interest rates, this is 10-year interest rates. As you can see, we've been steadily climbing, more or less. I mean, we obviously have peaks and valleys, and interest rates have been generally moving up. If we do that, if we see more inflation, the natural push on this is to push things higher. Whether the Fed acts or not to move interest rates, they will move on their own, and that will have a ripple effect. And that ripple effect comes in specifically to what we're going to talk about next here, which is the dollar index. And as we can see, the dollar index, while still at fairly low levels, we've seen a consistent rise in the dollar. That creates a natural headwind for commodities. So far, we've really avoided a lot of trouble. Crude oil is obviously elevated. Gold remains elevated. And grain prices, for where the balance sheet in, are also behaving in a fairly good manner. If we see interest rates move up, that will tend to drive the dollar higher. That also tends to slow business activity. So there can be a double whammy being placed on commodity prices. Now, there's some better news. Here, let me switch this. Okay, we'll start with corn prices. Yesterday, we had a pretty good rally in the grain markets. This was entirely driven by funds. Funds were coming in and they're buying on the idea that, one, we're seeing better ethanol production. We've seen good market rallies after the last 3 ethanol numbers. Now, this is something that's a little thin. It's not enough to really propel the market, but as you can see, the market had gotten fairly stagnant. So the market is going to be very news sensitive to this, and that is going to end up creating more volatility. If we see these ethanol numbers creep back a little bit, corn market can definitely stay in this channel on the nearby corn. Now moving on to soybeans. Look, soybeans did a lot better yesterday. We're trading above all the key moving averages. Nothing's showing any signs of being overbought, and we're getting a little bit of buying coming back in today. I'd really like to see us close above the high we made yesterday to give us, a much better looking chart, a chart that looks like it has made a bottom. And what's driving this? The Chinese hog herd is expanding and expanding nicely. China has been buying soybeans from both the United States and Brazil. So the soybean futures do not necessarily need buying just from the U.S. to catch a bid in here. We don't have that big of a fund. Actually, we have a net fund short position, which can create a bit of an overhang here. And if the market develops a little more pressure going up, we can see additional fund buying that can be supportive to the soybean market. Also, as Jeff was alluding to, we do have risk developing in Argentina, meaning that if we have a crop problem there, while Brazil's production is expected to be higher, we can certainly create at least some near-term positives for the market.
Hey, Sterling. Sterling,
Yes.
Can you hear me?
Yes.
Okay. I'm sorry, my dogs are going nuts in the background, and I must have a squirrel in the yard, so I apologize. But I had a question come in, and the question was, will Build Back Better legislation utilize soy oil in asphalt for resurfacing highways across the nation?
I have not looked into that. I have not studied that. It's certainly something that I guess is a potentiality. The one thing that I will warn you about the Build Back Better situation, and this is something that we're seeing, definitely here in Nebraska, there's going to be a lot of money flowing into states to build things. The problem is in most areas, where are you going to find the help to build this stuff? How quickly are you going to be able to ramp this up? So seeing any sort of intense sudden movement out of this, certainly for, you know, areas out here, you're not really going to be doing a lot of asphalt work from now until March. It's getting cold and it's probably not going to get any warmer. So any effects from the Build Back Better legislation will most likely be much slower and over time, rather than having an intense effect. One thing that it can do, though, it can propel my little friends on Wall Street who are always looking for a piece of news to trade on and buy into something. That could allow them some ideas about buying soybean oil, and that in turn could drive prices up. But remember, just as fickle as they are about buying it when they get good news, the second they get any bad news, they run for the exits. So I would not count or hang my hat on better soybean oil prices just because we're going to be out building asphalt.
Thank you, Sterling.
And the next thing we're going to talk about here is our friend natural gas, which hasn't really been much of a friend here lately. The main driver behind the natural gas market, and as you can see, the rally here has been really very, very intense, and we'll stretch this back and take a look about what's going on currently. Prices remain elevated. As you can see, the market has been able to find buyers right here under $5 very, very consistently. The pattern over the last 3 days was actually bearish, but it only confirms as a bearish pattern if we trade below the lows right here that I'm pointing at. If we don't, we could very well see another surge if we see a snap of cold weather either in the United States or continued cold weather in Europe. That will push natural gas prices higher still, and they will maintain these elevated levels moving into through January and into February. This in turn is probably not going to create a situation that's going to allow much in the way of relief for supply chain problems linked to natural gas and fertilizer issues. And moving on to the other market, and this is another issue, specifically why I wanted Jeff to talk about what's going on in Europe. Again, what happens with their wheat crop is going to affect wheat prices globally. The United States futures, along with what they have in Paris, are the ones that are most driven by this. And as you can see, Minneapolis wheat, which has been the leader, we had a little touch of volatility. And where the market had a chance to correct here and go back below $10, it didn't. So from my point of view here right now, I do think we have continued risk premium in this, and the market will probably have more resistance going down than it will going up, at least coming out through into February into March. The other thing that's helping drive the wheat market is when we look at milling wheat in Paris, as you can see, this market has been an unencumbered bull with absolutely nothing getting in the way. We had 2 days of selling a contract rollover, and that was about the only thing that drove the market lower. The European situation involving things like tapering, cutting interest rates, and that whole thing, they are in a much different spot than we are in the U.S., where the specter of higher inflation and higher interest rates are something that we are probably going to be looking at and having to deal with in a material manner sometime over the next 2 or 3 quarters is not going on over there. They do not see any interest rate hikes at all in 2022. They do not see any tapering. Why that matters is the euro currency is about 40% of the dollar index. This will continue to depress euro currency values, and I'll punch those up here real quick here. If we look at the euro versus the dollar, down it goes. When the euro breaks and goes lower, that puts a natural bid underneath the dollar. So we do have a situation here where we could be looking at a rising dollar situation, and this rally of everything at some point is probably going to have to come to an end, and that could spell additional trouble moving into the grain markets coming into the spring, along with it another market where I still have It behaved better yesterday, but I'm beginning to develop some concerns about the cotton market. The fundamentals are still good and supportive, but if we see a continued rise in the dollar, that could create problems specifically for the cotton market, given the size of the fund position, which is about 85,000 contracts long. Brooks, did you have any questions?
Actually, Sterling, no, Brooks had to step away. You always just make me sit here and scratch my head. I'm amazed at the things you bring to light. I do want to ask, does anyone else have any questions before we go on? I'm not seeing any right now in the chat or in the Q&A, so please, while we have Sterling and Jeffrey and Mike on, please put those questions right in there. We would love to answer those while we have everybody on today. Sterling, is there anything else you want to add?
One thing I would point out is make sure to stay informed this time of year. As Brooks pointed out earlier, we are entering a period of risk, and being informed is the most important thing that you can do for yourself. If you have any questions, certainly feel free to reach out to Brooks or myself, and we'll be happy to go over this. And make sure to read the daily reports and follow what's going on, because we're going from where we were to where we're going to be, and we're in a period where markets are very much in flux. I see a lot of things here that are getting pressed in a lot of different directions, and eventually something's going to snap and things are going to change materially.
Absolutely. That's what's so important about our daily emails and reports. We really try to keep you on top of all of this. So if there are no other questions at this time, and please feel free to go ahead and keep those in mind, and go ahead and type those in if you're typing now. But I'll go ahead and pass it on over to Mike, if that's all right with you, Sterling.
Absolutely.
Okay, let me get my screen up here, because I'm going to go ahead and share my screen, because I have the presentation for Mike. Can you all see my screen right now?
Yeah, looking good, Christy.
All right, Mike, go ahead and get us started.
Hey, good morning, everybody. What we're going to talk about today in my part of the presentation, I want to take a quick look at the current U.S. corn and soybean production estimates, give you my thoughts whether we go a little higher or a little lower in January. And my big question of the day is, right now input costs are very high. So my question is, will high input costs and potential availability issues maybe put a limit on 2022 yields? Next slide, Christy. I've got some good news on the harvest. We're ahead of pace. As of Sunday, we were 91% complete compared to the 86% 5-year average. But there are some key states with some crops left in the field. Kind of looking at the map, most of the crops in the field are still in the north and the east. Michigan's got 24% left, Ohio 22, Pennsylvania 19, Indiana 15, Wisconsin 14, and there is a little bit of corn left in the west. That would be North and South Dakota, Nebraska. And kind of my thoughts are too, we've had a lot of cold fronts rolling through, we've had a lot of wind, and I wonder how much of this late planted crop is going to be left in the field with additional harvest losses. Next slide, Christy. As far as soybean harvest pace, the soybeans are in a little different spot. Most of the soybeans are actually in the mid-south and the east. And as far as the national crop, we're 92% complete. We're just a shade behind the average, 1% behind our 5-year average. And again, there's some pretty important crops in the field left. North Carolina, Kentucky, Tennessee, and Missouri are the mid-south crops, and the northern crops are the Michigan, Indiana, and Ohio. And kind of my concerns on the soybeans, they've been wet, dry, and it's been hard to get a little window to get these beans cut. I know we've got a few beans left on our own farm here in central Illinois, so again, bean crop is near the end, but it's not quite finished yet. And once it gets past Thanksgiving, it's always hard to get those last beans cut. Next slide, Christy. Before I talk about the state yield breakdown from the November crop report, the current estimate of 177, which would be a record if realized, it considers to amaze me considering how dry the map was in mid-August. Looking at that map, I'm looking at Minnesota and Iowa. Lots of red on the map, lots of extreme drought, lots of farmers in Minnesota and Iowa were complaining about how bad the crops were. But believe it or not, the crops in Iowa are almost going to beat the Illinois crops, which kind of tells me that maybe the dry weather was better than some of the disease issues we had here in the Eastern Belt. Next slide, Christy. And looking at the November map, again, the two numbers that continue to amaze me, Minnesota's at 186. They had a nice increase from October. Iowa's sitting constant at 201. And Illinois, we actually lost some bushels. We're down to 207, which would put us at our second biggest crop. We lost bushels in Indiana. So again, the dry areas got a little bit better, stayed the same, and the areas that got almost too much rain got worse. I think a big part of that was some of the disease pressure we had in Illinois, Indiana, Michigan, and into the Eastern Belt. So again, where we end up from here, it's hard to tell. I think we kind of do drop a little bit. I kind of disagree with Sterling and Brooks a little bit. Maybe it's backyarditis, but here in Central Illinois, which I consider the major league of professional farming, where is the corn? It's outgrowing in the field. There's not a bunker filled. There's no bags in the field. So again, I know we are pretty empty going into harvest, but my thoughts are probably not a market mover, but I have a hard time thinking that the crop gets a little bigger from here. In fact, maybe gets a little bit smaller, but we'll see how that turns out in January. Next slide, Chrissy, we'll talk about bean yields. I was on the camp too. I thought the bean yield would go up a little bit, but the reduction to 151.2 actually helped our soybean price. I'm not quite sure where this number goes. I know the double crops have generally been pretty good, but we've already talked about all those beans in the mid-south and the east that are sitting in the field, and you always have a little less yield the longer the bean sits in the field. So I really don't have a good feel where that number goes, but I do know the reduction to 51.2 was very beneficial to our price. The next slide, Christy. So kind of looking at the 21 estimates, again, this crop amazes me considering how dry we were. But one thing we need to think about with 2021, we had very high prices all growing season. And it really wasn't hard to get inputs, although our fungicides were delayed. Nitrogen wasn't real expensive. So most growers threw the kitchen sink at the 21 crop. And again, especially when it came to fungicides, here in Central Illinois, we would have been 25 bushels less without very high fungicide utilization. So again, I think the ability of farmers to throw the fertility and fungicides at this crop really helped our yields. But my thoughts are looking into 2022, I wonder if skyrocketing fertility costs and much higher chemical prices will limit that ability to go yield chasing. So that's a big question for 22. Next slide, Christy. Here's one of those skyrocketing charts. I know Sterling's a charts guy, but this chart really shows something to me. This shows our retail ammonia price, and the red line is 2021. And look at that chart. It's almost off the chart. Down below, we've got some prices from previous years. So again, the ammonia price is up another 38% from October, and ammonia is 168% more expensive than this time last year. But I do have a little bit of good news on the fertility front. Next slide, Christy. What we have here is a current DTN retail fertilizer survey. And as you can see, the numbers continue to rise. But what most farmers are telling me, and what retailers did this summer when prices were going up, the vast majority of farmers went ahead and booked those prices or prepaid their P and K and also their ammonia. And again, I think we did a pretty good job of prepaying and managing those inputs. I do wonder, though, as we get out of the pre-purchase inputs, how many guys are going to continue to be applying the $1,100 ammonia. What I'm hearing around the Corn Belt is a lot of the corn-on-corn guys are applying fertility and ammonia they have purchased, and then we're going to kind of sit and wait a little bit. We'll get that ground ready to go corn or soybeans, but we're going to kind of monitor prices and monitor the fertility prices to see whether those acres go to corn or back to soybeans in 2022. Next slide, Christy. Probably more concerning is looking at the liquids. It's really hard to pre-purchase a lot of Uran, 28% or 32%, and there weren't a lot of prepay options for those particular types of fertility. And looking at the current price on Uran, for example, it's almost $1 per pound in. We weren't able to, again, to prepay a lot of this fertility. A lot of that is a spring purchase input or summer purchase input. And 200 pounds of in at 97 cents a pound is almost $200. So that's really going to be putting the lid on some corn acres, in my opinion, especially in some of the fringe acres. And again, it was really hard to prepay a lot of the liquid nitrogen prices. Next slide, Christy. Last slide for me, guys. I know that herbicides are following fertility. You can get glyphosate, but here's a slide I pulled off the internet a few days ago. Yeah, there's lots of different types of glyphosate one can purchase, but these prices are very, very expensive. So at this point, looks pretty good to me. I think a lot of the fertility that's going on the field today and the ammonia was prepaid. But once the prepaid stocks are used up, I wonder how much more additional fertility will be applied this fall. And it looks like to me the herbicides are going to kind of follow the fertility as we work towards spring. Any questions for me, Sterling or Christy, or from the audience?
I am still not seeing any questions. Sterling, are you seeing any out there? Maybe
I am not.
Right. You guys have just been so thorough. How wonderful is that? Do want to remind you all that today's session has been recorded, and we will get that uploaded onto our YouTube channel, and we'll also have that in an upcoming Daily Edge email that will hopefully be out by the end of this week. I know that's just tomorrow. It may be the first part of next week before we get everything lined out, but we will get this out shortly. Do want to remind you that we have another WASDE that will be coming out in December. Sterling, you want to give me a little bit of information on that, or is that something we should be really super excited about, or is that going to be boring this time?
Well, normally the December report is not one that's fraught with excitement. However, I will guarantee if I can jinx myself by saying it's going to be boring. So it is, given the way crops went in. I think, the U.S. stuff, I'm not looking for big surprises there, but we may see some surprises on the global scale, which will move our markets just as much as if it were a U.S. problem. So I definitely think everyone should tune in. And when are we going to be running our ugly sweater contest, Christy? Are we going to be doing that for the WASDE, or are we going to do that on the third Thursday in December?
Well, you know what? I think we should probably do both. The third Thursday will actually be December 16th. So I don't know. We could have an ugly sweater and maybe a Santa competition. I don't know. We'll see what we can do or a reindeer competition. I don't know. I could have you guys dress up as anything. You guys do a great job. Jeffrey, you could join us. What's your favorite reindeer?
Rudolph, of course. Love that red nose. So he's my guy.
There you go. There you go. Well, we do want you all to join us for these upcoming events. Like I said, the WASDE will be December 9th, and then the third Thursday will be December 16th. And please be watching. We'll have all that information in our email newsletters and in our agent newsletters. So watch that from your agents. If you're a producer, we want to make sure that you get that information. We want to wish you all, on behalf of AgriSampo North America and our ASNA Edge team, we want to wish you all a very, very wonderful and warm Thanksgiving holiday. We hope that you can spend some wonderful time with your family and friends. So thank you very much for joining us today. We do appreciate your time. If you have any questions, please submit those to our email address, which is marketinginfo@sampointernational.com. I'll put that back in the chat. But again, we thank you so much for being a part of our morning discussion, and have a great day. Thank you again.